Today we are diving into what I can only call a regulatory earthquake out of Washington, D.C.
That's a good way to put it.
The Federal Trade Commission, the FTC, has just made a move that is so rare it fundamentally changes the risk calculation for pretty much any company working in generative AI.
We're talking about the decision to set aside a final binding consent order against the AI writing tool, Rytr LLC.
And this isn't just, some bureaucratic paperwork. This is the clearest signal yet that the federal government is shifting its entire philosophy.
It's a pivot from regulating tech based on the potential for misuse to only regulating based on actual demonstrable harm.
It's a complete 180. Okay, let's unpack this and figure out what it means for the entire AI investment thesis.
So the official action happened on December 22, 2025. The FTC reopened a case that had been settled a year before, and then, in a move you almost never see, they just set aside the entire final consent order.
And a consent order, just to be clear for everyone, that's a legally binding deal, right? A settlement.
Exactly. The company agrees to restrictions without admitting they did anything wrong, so for the agency to just undo its own settled action, it's like them admitting they got the call wrong in the first place. It's a massive institutional signal.
And the signal was loud and clear. This decision came from the two active commissioners, Chairman Ferguson and Commissioner Metter, and they gave two main reasons for the reversal.
Right. First, they said the original complaint didn't actually satisfy the legal requirements of the FTC Act, specifically Section 5.
And second, and this is the big one, that the original order unduly burdened AI innovation.
The immediate result is that all those restrictions on Rytr are just gone. The 2024 order had an outright ban on them offering any AI tool that could generate reviews or testimonials.
Which was a killer for that product line.
A death knell. And now that's nullified. The case is effectively erased.
Okay, to get why this is so huge, we have to go back to the original fight in 2024. Rytr is a general writing tool, but the FTC, under the old administration, was fixated on one feature.
The testimonial and review generator, that's right.
And the original complaint was part of former Chair Lina Khan's really aggressive strategy. What was it called?
Operation AI Comply. It was a very explicit effort to get ahead of the AI curve and, prevent massive harms before they happened.
And the thing that really sparked the panic was the scale of the misuse they were alleging. They used this legal theory of means and instrumentalities.
Basically arguing that Rytr was providing the tools for mass fraud. The numbers were pretty shocking.
I remember this. One user allegedly generated something like over 39,000 fake reviews in a single month.
39,000 for replica designer goods. So the thinking back then was simple. If a tool can be abused on that industrial scale, the tool itself is the problem.
So they didn't have to prove Rytr wanted the fraud to happen.
Nope. Just that their service provided the means and instrumentalities for it. But then, of course, the political tide turned. Hard.
Early 2025.
Absolutely. The whole regulatory world changed with President Trump's January 23rd executive order. The focus became removing barriers to U.S. leadership in AI.
And that was followed by the America's AI Action Plan in July.
And that plan had a very specific instruction for the FTC. Go back and review, and if necessary, set aside any prior orders that unduly burden AI innovation.
So this wasn't just the FTC changing its mind. This was them following a direct White House mandate.
It was. The government officially decided global AI dominance was more important than preemptive regulation. And we should remember, the current chairman, Ferguson, had already dissented on the original 2024 order. He argued back then that it threatens to turn honest innovators into lawbreakers.
So he was just waiting for the chance to execute that philosophy.
And now he has the majority.
Okay, so we have the history, we have the political mandate. But what does this regulatory earthquake actually mean for people building and funding AI right now?
It means the philosophy has completely shifted. The FTC is now laser-focused on fraud and tangible consumer harm, period. They were done condemning technology just because it could be used for bad things.
I saw the quote from the Bureau of Consumer Protection Director.
Christopher Mufarage, yes. He said, condemning a technology or service simply because it potentially could be used in a problematic manner is inconsistent with the law and ordered liberty.
That is a powerful statement. Essentially, we don't regulate based on fear, but this whole thing hangs on that legal idea. The means and instrumentalities theory. Can we break that down a bit? It's really the core of the whole story.
It is the core, and it's a powerful tool for regulators. Think of it like this. If I sell you a high-quality printer, a general-purpose tool, and you print counterfeit money, I'm not liable.
Okay, makes sense.
But if I sell you a special printer designed only to make fake driver's licenses, and I give you the special plastic and hologram stickers, then I've provided the means and instrumentalities for fraud. Now I'm on the hook.
So in 2024, the FTC was saying Rytr's review generator was more like the second case. It was an instrumentality of fraud.
That was the argument. But the new FTC has put some serious guardrails on that theory. They're now saying for it to apply to AI, one of three things has to be true.
Okay, what are they?
1, the product is inherently deceptive. 2, the company provides deceptive materials along with it. Or 3, the company has actual knowledge that its users are breaking the law.
And the key part of the Rytr reversal is that the FTC decided
That none of those three things were proven, especially, and this is the most important part, because Rytr's tool had legitimate pro-consumer uses.
For example, someone who's a verified customer but struggles with writing could use it to generate a first draft of a real review.
Exactly. Because that legitimate use existed, the FTC now says the product can't be called inherently deceptive. And with that, the whole legal theory just collapsed.
Wait a minute. So if a product has any clear legitimate use, is it basically immune from this theory now? I mean, does this functionally neuter that entire regulatory tool for big multi-purpose AI models?
For multi-purpose models, yes, I think it significantly constrains it. That distinction, the existence of a legitimate use, is everything. It shifts the burden of proof. It tells AI companies that their liability is now less about what their worst users do and more about how well they can prove the positive uses.
That's what you mean by a relatively longer leash.
It is. For an executive or an investor, that longer leash is incredibly valuable. It means less money on defensive legal compliance, more freedom to launch features fast without worrying that one bad actor will bring the whole federal government down on you.
And that legal certainty is crucial for M&A. Less regulatory risk means easier consolidation.
Oh, for sure. Operation AI complies scared investors because of that threat of early-stage intervention. This ruling clears the runway for tech giants looking to acquire smaller AI companies and invest in foundation models.
Okay, so the federal bar for enforcement is way higher, but not everyone is celebrating this, right?
It's far from it. The Consumer Federation of America immediately called this a corporate pardon and a green light for scammers.
Their argument being that this puts tech company profits over people.
That's the one. And it's a vital counterpoint. If the feds are backing off the tool makers, who's policing the fraud?
Well, the FTC says they still are, right?
They do. They're still cracking down on fake reviews in general. Shortly after the Rytr news, they sent out a bunch of warning letters, so they'll still go after the person using the AI to commit fraud. They just won't go after the neutral, multi-purpose tool provider anymore.
Which creates a vacuum.
It creates a vacuum that state regulators are going to rush to fill. You have to assume state attorneys general will start pursuing their own cases under state laws, which often have a lower bar. So the field isn't totally clear, but that dominant federal risk, it has softened dramatically.
That analysis is a perfect roadmap for the new risk landscape. Now, let's pivot. Let's turn that regulatory clarity into market opportunity. It's time for our favorite segment. This is not financial advice.
Let's do it. So, look, the Rytr decision isn't just a one-off. It's the physical proof of the administration's policy of AI accelerationism. It confirms that the leadership in Washington sees less government intervention as the best way to win the global AI race. The goal is to dismantle anything that slows down American tech.
Okay, so with that as the backdrop, what's the trade?
The high-conviction trade idea is to take a long position on a major AI infrastructure and chip provider. Let's just use NVIDIA as a proxy here.
Interesting. A bet on the hardware.
It's a bet on political priorities. The thesis is that the FTC's deference to innovation, which we just saw with Rytr, is going to spill over. It will likely lead to the tempering or maybe even the dismissal of certain pending antitrust investigations in the short term.
So you're saying the AI race trumps antitrust concerns?
That's exactly what I'm saying. We know there's scrutiny around market power in AI chips, but the signal from the Rytr kind of case is that this administration will prioritize accelerating AI infrastructure, meaning more chips, faster over worries about market concentration. The political calculation is if we slow down our market leaders with antitrust suits, we risk losing the global AI race.
And the Rytr decision shows us which priority wins.
It shows us which priority wins. And for a company like NVIDIA, less regulatory risk means a higher, faster growth ceiling.
That is a fascinating call, grounded entirely in this shift from a risk-averse posture to an accelerationist one. So, to recap the key takeaway from all this.
The FTC's action on Rytr is the official adoption of a new federal philosophy. It shifts the burden of proof away from the potential for misuse and squarely onto demonstrable, tangible consumer harm.
It creates a foundational principle. You can build powerful tools as long as you can point to legitimate pro-consumer uses for them. That clarity is maybe the most valuable thing to come out of this.
It really is.
So here's a final thought for you to chew on. Now that the FTC has effectively neutered the means and instrumentalities liability for any multi-purpose AI, think about which other foundational AI services, which other platforms that were investigated under Operation AI Comply might be next in line for a regulatory partner. And what does that signal for the future growth ceiling of the entire generative AI industry?
A very good question to ponder.
Thank you for joining the deep dive. Please share your perspectives on these shifting regulatory winds. We'll see you next time.